Hey guys, Mike here. So, oh boy, what a snooze fest in the market, which we kind of expected because it's been a big move up so far. So the market is digesting, and we hit two key things at the same time on the S&P 500, and immediately sold off from that happening. I should say in level, but yes, it's in level, and something else coincides with it. Always look for confluence. That's usually where you're going to get your big moves at. But I don't know if you're noticing this on earnings, but when it comes to earnings, you're seeing your big boys having trouble hanging on to the earnings gains they are making, even if they're reporting really good earnings. And then the high flyers, the ones, especially stocks that, basically retail investors love the most, if they aren't checking every single box on their earnings, they're getting heavily punished. Okay. And if there's any stocks that had big moves up, and off the last two earnings, they're getting punished too. And we're going to go into a few of those. But I do want to clarify one quick thing. And there is something kind of, I don't know, it's not bearish or bullish really, but very interesting that happened in the market as well. But I do want to clarify a question somebody asked me about Berkshire Hathaway's cash pile, right? And so, because you're hearing about its record number, and it's always going up. But understand, this isn't just cash. Like they buy a lot of T-bills, okay? So just understand that very clearly. But if you look at this, you can see when they, make a dent in that cash pile, right? It's during those drawdowns, like 2022, 2020, 2018, 19 crash rate. I should say the end of 2018. But if you go through, I guarantee you can line these big dips up, and these, of course, are billions of dollars with the big moves down in the market. And I bet you a lot of those are Apple stock, by the way. Now, comeback player of the day, and to show you the tomfoolery that happens in after hours, this is Celsius, right? They reported dropped 25%. And by the time this thing opened, had almost fully recovered, right? Their numbers hadn't changed, nothing. And then immediately they sold them off, okay? So if you were in puts and actually were able to get out of that with some skin, let me know. But again, that just shows you the tomfoolery that happens, and then it settled and went on across for the rest of the day or whatever. But that is nuts right there. I mean, absolutely nuts. And they had great growth, by the way. But, it just didn't hit the higher expectations. When you have a big move up, you need higher expectations, right? And they wasn't about to pay those puts out to where they were at there, so they ran them back up before the market opened and stuff. So that was just crazy. Now, what happened to S&P? Obviously, it was green, but as soon as it hit 5,200 and that upper trend line of that channel, boom, that's when you're going to get rejected, right? 5,200, those big round numbers, I always look for those, mark them out there, especially if they coincide with something like a fair value gap or the top of a channel, bottom of a channel, all that stuff. And so, of course, the question is, will we come back down, maybe mitigate this daily fair value gap after a huge move up these last 3 days? Even go down and test the bottom channel before going to 5,200 or what? That's what we got to figure out. But what's really weird, and I was telling members, is the fact they're 1.5% away from all-time highs, and yet on the Fear and Greed Index, you guys know best, it's fear, right? And I track two of these, right? I track the PI Investing Fear and Greed Index, which I'll show you because I always get questions about it, and then the CNN Fear and Greed Index, which is the one you know the best. And this morning when I put it up there, it was 41, right? But it actually dropped in the middle of the day. So when you look at the PI investing one, the reason I like to use two of them because they track two different things when we're talking about fear and stuff. This one tracks the percentage of stocks that are in an uptrend and above its 6-month exponential moving average, and say 65%. So it's actually in greed, right? But the CNN one is in fear. It has like 5 or 6 different metrics it tracks, and it's at 38 now. Yet we're literally 1.5% away from all-time highs. And so, when you go back, the biggest thing to watch out for, again, is going to be the 50 moving average. See if we retest it. As long as we stay above it and test it successfully, that is still a bullish thing. As long as we stay in this channel, moving up or break out of it, that is still bullish as well. We just got to see what they want to do with the market when it's digesting this large move up. Now, Tesla, you might have noticed, it was down. Again, levels to watch, 173, 184.10. All right, it's jammed in between there right now. Reason why it was down, as usual, the biggest problem, EV sales, right? So Tesla delivered 62,167 EVs from its Chinese Gigafactory in April, and of course down 18% year over year and down prior month as well. So from March to April. So again, that's really their biggest problem. The other thing that kind of rubs salt in the wound is their biggest competitor is BYD over there, and they don't just do EVs, right? And so they do the plug-in hybrids as well, but their sales were actually up 48.97% year over year and 3.5% increase from March. So that kind of makes it look even worse. Again, like I said, you can sell the robots you want to. Doesn't fix the problem in China right now. That's a big problem. Now, Apple, I noticed it was somewhat green today. Remember, they're supposed to have an event and everything going on. I'm going to get rid of these because we don't need them anymore. But again, 178, 180 still holding strong for this one. That trend line right there, we get our third touch around 186, 187. That will be interesting to see. But I got to tell you, man, there's no doubt in my mind if Steve Jobs was alive, he'd be rolling over in his grave and being like, what the hell are we doing? Because, I mean, the stuff they rolled out, I mean, the stock just sold off after every little thing they rolled out because it's kind of the same thing, right? The new iPad. The M4 chips seem pretty cool, right? But besides that, it's like, here's your new iPad. Here's your new iPad. Here's your new little ear thingies. Oh, and look, we're going to come with a magic keyboard and then a magic pen, of course. That was probably my favorite one. So, and these things aren't cheap, by the way. I mean, these, it's a magic pen here. What's that magic pen starting at? $129, right? They didn't even talk about the goofy goggles they got. I don't know what the price is, but I mean, and that was it, right? I mean, I didn't get no robot dog. I didn't get nothing. And so we'll see how the market wants to eat this one up tomorrow. Again, it just sold off as they kept presenting the same stuff, just making it more cool or whatever. Again, but I was really hoping for some really, really like big time stuff, but that did not happen. Maybe later on. Now, Palantir right here, you can see obviously got crushed. This is what I'm talking about. One of the stocks, we'll go over a few of these during earnings. And so again, this one got hung up and saved by the 100 moving average. If it continues to push to the downside, obviously, that trend line around 1952 will be good support for it right there. If that breaks, then definitely you can see it heading down to 18. Once again, the 50 moving average and the trend line above will be resistance. So really, what is it doing? It's just setting back down in this rising wedge right here again. So, we'll see if they can hold this or not. Again, it's mitigating this weekly fair value gap, and we'll see if it can mitigate it completely. Now, when it comes to their customers, obviously, like I said, you got to hang them on. You got to check the box on everything. The customers look good. You give them that right there. That's total. That's commercial, which they're worried about. And then, of course, the government's just flat, right? So everybody wanted to switch from government into commercial, so they've kind of done that. But their CEO doesn't help when he talks. I mean, I listened to a little bit of it, and him talking about, hey, if we had a real sales force, well, hey, why don't you go out and hire one then? That'll probably help you. And speaking of another one that got punished, here's Disney down 10%. So the mouse got absolutely crushed in a mouse trap today. We'll take all this away because it don't even matter right there. And again, you got to check every box. It wasn't disastrous, but they did not like their guidance. So now we're here in this gap right here. And I bet you if we bring up some moving averages, you're going to see it probably is sitting on a moving average, which does not surprise me one bit. And there it is. So 100 moving average right there. You notice a lot of these is what happens. As soon as you see the big drops, pull up moving averages and see if it caught a moving average. Now, if this one is going to continue, down right here, obviously filling that gap will be nice. You can see with the RSI and the MACD, obviously going below 50 and 0. That is not good for this stock. But it has had a huge move up, by the way. Absolutely enormous move up. But if we bring up the volume profile, I mean, the levels it has to hold, which would be good bounce points, you can clearly see 95. First, you're going to see 100, right? So $100.75 roughly, and then 95. Might have noticed Chinese stocks were also red today. Obviously, one reason, the main reason, they've had huge moves up, mega moves, right? Coming up because a lot of them are breaking out of these long-term trend lines. Something else that came out, though, was a report from Forbes, and it was just part one, so there will be a part two, but it talked about how, shocker, China's falsifying their data and all this good stuff. And I mean, look, do I believe any of the data coming out of China? Never. And I said, it doesn't matter what we believe, though. As long as the market wants to believe it, that's all that matters, right? And it's just and the charts matter more than anything, it seems like, because obviously, as they're breaking these long-term trend lines we've been talking about for months, you see they are exploding, okay? You can clearly see the volume increasing. You can clearly see Wall Street is putting money back in there. That is what is happening. And it's not a coincidence he had the top 30 CEOs over there, 30 days ago, less maybe, 3 or 4 weeks, and all of a sudden their stocks start to move up. So, I mean, that was not a coincidence at all. And so we'll see, again, they need a breather. You can't move up the percentages they moved up, and then especially a major index, and then not have a breather down. The question is, where will they find support? That's the big one. But then just want you to know, because we'll see what happens in part 2 hits out of Forbes magazines about that one. But I don't think, are they surprised anybody with that report? Really? They're falsifying their data? I just can't believe it. Man, they've never done that before. Now, watch Amazon here, right? Amazon set a new all-time high by basically a few pennies But you can see last time it said it. What happened? Got a double top. What are you looking at right now? If this does not continue to move up, well, when we pull it up here, that right there could play out to be a double top. And so let's pay close attention. If you're in TradingView, you can just type this in sometimes and it'll come up nice and smooth and you can look at the targets and everything else. Again, don't mean they got to play out, but again, this is what you got to watch for to see if it's going to double top or not. Amazon's kind of famous for doing that a lot. Now, Google, might have noticed it was actually probably the greenest of all the big boys today. And then the reason why is because this was an AI pump. Okay, it's not an all-time high, but it's very close to another all-time high. But what they decided to do is some other companies don't seem to be doing. They decided to add hundreds of jobs to its new AI-focused team. So the market was like, woohoo! So we'll see if this continues to push it up. This has been one of the biggest movers, right? And it surprised a lot of people. Now, when it comes to earnings for tomorrow, Uber, Shopify, Affirm, it's going to be some of them, Toyota, right? Go over there, you're going to have ARM. This is a semiconductor. They got that big old huge move up, and these have been getting punished if they hadn't hung the moon, okay? Robinhood, Airbnb, Trade Desk. And then as far as economic stuff, no data, but all you got is a 10-year bond auction at 1. So this will mess with yields. If it goes good, yields will drop. If it goes bad, yields will probably spike. As I told members, they're wondering why the 10-year dropping, which is why you see the market rallying so hard, right? Because it's just been coming down, 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 down. That is the bond market saying they're going to cut. Talking about the Fed. As soon as that employment data came in soft, right? What'd you see them do? They pulled forward again from November into September now a rate cut. Okay, and so again, that's this game. Every time you're going to see some soft data come out, we're going to play the rate cut game. That's what we'll just call it from now on in. Okay, and then of course, and the Fed's been not as hawkish because the guy was speaking today. We expected a lot more hawkishness. He was just right down the middle. So it's kind of like almost they've been sent out to say, yeah, we're not going to be too hawkish. Let's just go right down the middle, right? Kashkari or whatever his name is. He would say something that's hawkish, and he'd come out and say something like he's just basically right on top of just going down the fence, right? Trying to stay right dead in the middle and not do anything. And so he was kind of a nothing burger. So and nobody's usually more hawkish than him. So I can't imagine any of the rest of these Fed speakers are gonna push the market down anymore. So that's where we're at. Watch the 50 on the S&P. Watch the top of that trend line and 50 to 100. Those are your key levels to watch right now. We could just go sideways, which would actually be really good for the market, actually, to build out and consolidate right there to build out support before moving up to all-time highs again. Again, it's hard to believe. You wouldn't think we're sitting this close, right? I mean, 1.5% roughly to all-time highs. You wouldn't think it, but that's where it is. Or are we just going to end up selling back down, right? Because remember, we are in May, and I'll come out with something tomorrow to show you. People say, you see it all over Twitter right now, sell in May and go away, right? And so we'll see how it goes. Let me know if you're doing that or not. But I've showed you that it's a 60-40 split over the last 10 years, 60 good, 40 not so good. So, we'll see. But anyway, hope you got something out of it. Thank you guys for all who watch. Hit that like and subscribe button on your way out. And have a great one, guys. I'll see you tomorrow.